Hello, Business 330 students. This is Professor Hasse. It's week 4 of our business finance class, Capital Valuation, and we're at the halfway point of our Fall 2 session. That means it's midterm examination time, covering chapters 1 through 5. The midterm is posted and it's due Sunday, November 20th. It's pretty condensed, some multiple choice definitions, an essay, a portfolio update, and we'll talk about that in just a minute. Our subject this week is stocks and bonds, chapters 6 and 7. Our Friday update video will talk a little bit more about that and also review assignment number 2. So you have that review and grades posted by our Friday update videos, so you can use that information in your midterm examination work. We also have this week a discussion of where we are at the halfway point of our class, making sure each student is aware of your grade situation, your participation and engagement in class. If you have any questions or concerns about that, I will be available Thursday evening from 6 to 8 o'clock via Zoom if you'd like to discuss that. If not, if that time does not fit your schedule, I am available all week if you need to discuss where you are in class and any help that you may need. So first of all, let's take a look at our midterm examination. Here's our Blackboard site, which by now at the halfway point of class, you're probably becoming very familiar with. If you're not very familiar with it, then you better get familiar with it rather quickly. As you know, work is beginning to accumulate week on week. Need to stay on top of our class. Again, here's where we are currently in week 4 of our class. We've done assignments, we've done our discussion posts, our student bio, our portfolio. We've done assignments 1 and 2. The assignment 2 grades will be posted by the end of the week for our Friday update video. The midterm examination is this week, due on Sunday, November 20th at midnight. So that adding all that's up, that's 5, 10, 15, 25, 45% of your grade will be calculated at the end of this week number 4, heading into, we get a little break over Thanksgiving and then picking up our work with assignment 3 and our case paper, which will be a subject of next week in our class lecture video. So that's where we are in class right now, or studying right now. Here's our assignments section. Midterm examination is now posted. As usual, 2 formats, a PDF format and a Word doc format, both the same. Again, this examination, you have to submit 2 files, your work on the examination and also a spreadsheet file of your portfolio updates, okay? Portfolio updates, and we'll talk about that in just a minute. So the midterm examination file is now posted, or files. Week number 4, there's our learning assignments for this week. Our topic is debt and equity. There's a brief explanation of, here's a spreadsheet file that I'll be working on in my lecture video today and on the Friday update video. Our financial fact this week is capital structure, which is a question of your midterm examination. You're to find the capital structure of one of your companies in your portfolio. There's the definition of capital structure. It's made up of debt and equity to fund assets of a corporation. And then the specifics of each chapter, PowerPoints, key topics of chapters 6 and 7. Okay. So that's where we stand. Let's take a look specifically at the midterm examination. Okay, here's the midterm examination for this week 4. It kind of sums up the first 3 weeks of our class, chapters 1 through 5. Basically, again, a rehash of the definitions in the multiple choice questions, some calculations of profit margin or understanding financial statements, which we talked about in assignment 1. Description of present value or time value of money, present and future value. Some calculations. A quick definition of bond interest rates. Calculation of stock interest rates or stock return, kind of related to your portfolio, and some additional questions in regarding the time value of money. Then you are to update your portfolio as of Friday, November 18th, this Friday. Again, update your values, update the indexes, and also determine and look up the beta value of your company. This will be a subject of our Friday update video. Find the beta of your company. That is very easy to get. It's located right on the front page of your specific company in Yahoo Finance. You can just Google it and find the beta of your company. And the final question is an essay question. It requires a little research and a little interpretation. Discuss the potential impact of the recent financial crisis, the pandemic 2020 to 2022, on the capital structure of your portfolio companies. How has your selected corporation changed from January 1 to 2020 to September 30th, 2022? Capital structure is the percent of debt and equity on the balance sheet to assets. I explained capital structure in our week 4 there, in our week 4 notes. Please cite examples of financial statement analysis, corporate governance, and competitive markets. Your essay should be a minimum of 2 pages, not to exceed 10 pages, double-spaced. Do not worry about the format. It doesn't have to be an APA format. You can type it on the same Word document that you're using for your answers to the multiple choice questions or the other questions. You have to be concise. In other words, there's a variety of ways you can do this. You could do a quarterly analysis from January 2020 to September 30th, 22, do a quarterly analysis of what the capital structure is and see how it trends over that time. Again, you could also do a annual analysis, maybe the fiscal years during that time period of your company. How has the capital budget, capital structure changed? Once you get those percentages and see maybe a trend on how, if the company has higher debt or lower debt during that time period, explain what in your interpretation might have caused that. Has the company been had a change in leadership, the corporate governance? Has it had a change in management? Has the markets or the industries that they compete in changed during that time? Try to compare how the capital structure has changed over that period or trended to various different types of interpretations, change in management, markets, whatever. That's what I'm looking for in this essay. You can use the same company that you used in assignment 1 when we did that financial analysis. You can use that same company if you like. If not, you can choose a different company. But whatever, you need to find or do an analysis of how that company changed for the good or better, or maybe didn't change from January 2020 to September 2022. Great question. Lots of interpretation, a little research. Love it. Okay, so that's the midterm examination. All right, that's what you have to do this week from November to Sunday, November 20th. Again, the youth extensions are available. If you need some extra time, let me know. All right, here's the portfolio spreadsheet as of my sample as of our October 28th purchase. So what you're going to do now is update this as of November 18th. And here's how I would do it. I would basically take my original portfolio and just copied it down. Copied it down. And now this would be an November 18, 2022 update. I would change the date to 11/18. Copy it down there. And now I'd have to do another change. Remember, in our original portfolio, we took the amount we invested, totaling 100,000, and divided that specifically by the stock's price to get the number of shares rounded to the whole number. Well, now what we're going to do is find the new share price on November 18th, and then we're going to multiply it by the number of shares to get our new corporate value. So now we have to do a couple of different things, because right now, if we copy this all down, we now have a formula here. So now we're going to have to change this to no longer have a formula. So this is what I suggest we do. We, again, go back to the original amount and highlight it and then copy it, Control C or however you want to copy it, and then bring it down here to your new update section and go to paste, and you want to paste it in just values. Just paste values. In other words, notice what I just did. Now, if you go to that cell, you won't see a formula. You'll see the actual value of the number you calculated back on October 28th. So now it's a value here. So now all you have to do is, let's say Apple goes up to $160. I wish. And so now I will take that and equals that price times the share amounts that I originally purchased to get my new value of my stock. Okay, so that's the key difference. No longer a formula for shares. The formula will be in determining your new portfolio value by taking those shares that you originally purchased and pasting them as a value, as a number down here, and then taking your new share price at the close of business on November 18th, multiplying it to get our new value. You got to update your stock Dow, S&P, and NASDAQ indexes as of Friday, the 18th. Don't forget that, because in the next assignment, you'll be doing some more additional work with this information. And the last thing has to do with the question of the portfolio, where you now are going to include the beta for your company, the beta index. So notice I have created a column, and now I have beta here. Now, naturally, the beta is going to be as of November 18th. So I'm going to block that off because that doesn't do us any good there. So now we're going to find the beta. So your beta is anything ranging from 0 to probably about 3. 0 to 3. That's your companies will fall into that area. Probably more around 1, 1.5 usually, but that's what you're going to find. So you're going to put the beta here as an addition to your portfolio for the midterm examination, beta. All right, so that's what your portfolio will look like after you update it as of Friday, November 18th. Here's our original purchases, original indexes, and now updated with the new prices times the original shares you purchased equals the new values, and then the update to Dow, S&P, and NASDAQ, and the beta of your company. That's where we stand as the midterm question for your portfolio. Then you submit this file in a spreadsheet format with your work. Okay, as a review of what are the key topics of chapter 6 and 7, I'll roughly go through the spreadsheet review today, but I'll talk more specifically about it in my Friday update video. What is a bond? A bond is a debt obligation, and almost all corporations issue bonds. Why? It's cheap and it's easy to get the money. Most companies, major corporations, need hundreds of millions of dollars. Banks cannot supply all that capital because of their reserve requirements. One bank can't lend one company $400 million or $300 million. It's just too much of a risk for that institution. So corporations have an option. They can put together a conglomerate of banks to issue the loans. That sometimes can be a very big hassle because banks have their own specific risk requirements, you have their own specific credit requirements, and that can be a big hassle for a lot of corporations. So why not go out and issue the money in one full swoop as called a public auction by going to the public markets, going to insurance companies, pension funds, retirement investment houses, brokerage firms, the general public, other banks, and borrow the money in a bond. A bond is what is called a non-amortized debt. Remember, we talked about amortized debt in chapter 5, where you have to make equal payments over a period of time where the interest and principal are part of each payment. Non-amortized debt is what a bond is. You just pay interest only until maturity. So it's an interest only obligation based on the credit rating and the and the current status in the market of your company, and you pay the principal back at maturity. So that's what is called a non-amortized loan. You and I don't have that luxury because banks, or excuse me, corporations put up their collateral, their assets as collateral for that bond obligation, or even the amount of money that they're investing in as collateral at that assets to guarantee payment. So that's why they can get an interest only loan. So a bond is set by the current market rate of that debt obligation, usually the credit rating of the company, and that current status of rate in the market. Remember, we talked about risk-free interest rate, the current 10-year market yield. That is the basis or the benchmark for all debt. So if that rate goes up, corporate debt interest rates will go up as well. That's the market benchmark. So you price your bond in the market, you get a coupon rate, and then you have to pay that coupon. In this case, you can see on the screen a $1,000 bond. All bonds are issued in $1,000 obligations. You can go to your broker and say, I would like a General Motors 1,000 10-year bond or 20-year bond, and you can go to the market and purchase that. And when you have a coupon, that coupon is the interest rate that the lender, or excuse me, the company that's borrowing the money have to pay. So if it's $1,000 bond and the coupon is 7%, $70 a year. Now that can also be paid every 6 months, semi-annually, $35 every 6 months. And it depends on how the bond is set up, either semi-annual or annual payments. So that's how a bond operates. What we'll talk about on Friday is what happens if I want to sell a bond in the market before it matures. How does the current market yield affect the price of that bond to whoever is trying to sell it or purchase it? But that's the definition of a bond. Now, if you go to the next tab, it talks about Chapter 7 and stocks, where a bond, your only payment is interest, and then you get your money back at maturity date. So, but the only revenue stream basically is the interest, the coupon. In a stock, two main sources of revenue stream. Number one, the dividends. Now, not all companies pay dividends, but most companies, most major corporations pay dividends. In other words, every quarter they announce, or twice a year, they announce a share of their profits will be distributed as dividends to their shareholders. That's a revenue stream. Another way of getting income or revenue from a stock is you got to sell it. You sell it. You sell the stock at market in the future, and you compare that to what you paid for the stock. The difference naturally is the capital gain. So two revenue sources really from an equity position. The bad thing about it is you can also lose everything from an equity position. You are an owner of the company, and owning stock, if the company goes bankrupt, you are getting zero. You lose it all. Whereas a bond, if a company goes in default on a bond, that's why they have the collateral, the assets. They have to sell off their assets. They sell those assets off and they pay you back the money they owe you on the bond. That's required by law. Now, sometimes it takes a little while to get that money, but eventually you get the money. In a stock, no way. You lost everything. So that's the risk involved in stocks. It's because you have an obligation as an owner to sink or swim with the company, and with two revenue sources, dividends and naturally sell the stock. So stock is, we hope, we expect, expectations, whereas a bond, it's fixed income. You know you're going to get it no matter what. So that's where the risk is in stocks. It's capital investment, it's big money, it's money that comes from all over the world to invest in your company. You can, as an individual, as you all know, you can do Robinhood apps, you can do Schwab apps to buy stock, or you can buy stock through your broker. You can buy stock through your 401k, your retirement pension fund. You can buy stock through your bank account. Wells Fargo will be more than happy to open up a brokerage account for you. So again, stock is risk, but it's very sexy. It means I own something. But there's a lot of risk to stock, and we'll talk more about that on Friday. So here we are, beginning week 4, midterm examinations. Some of you are still cleaning up assignment 2. I will have those grades posted by Friday, and this is our midpoint class of the course. So now's the time to assess where you stand, how you're doing. If you need help, do you have any concerns about the future, where we stand at the end of 4 weeks. I'm open for your comments, your criticisms, your support, anything you need, please let me know. Have a great week. We'll see you at the end of the week on Friday update video, and good luck with your midterm. Adios.